30 minutes, one AI conversation, and a clearer understanding of how to evaluate a stock than most people develop in months of reading. That is what actually happened when we ran this experiment. And before we go any further, this is not financial advice, this is not a prediction system, and nothing here tells you what to buy. What it is an honest account of what AI can genuinely do for a complete beginner trying to understand investing for the first time, including where it falls short, because that part matters just as much. Here is why this experiment is worth your time even if you have never invested a single dollar. The reason most people do not invest is not money. A lot of people have some amount they could put to work. The reason is the confidence gap. The feeling that everyone else understands something you were never taught. That the language of financial analysis, price-to-earnings ratios, debt-to-equity, free cash flow, belongs to a world that requires years of education to enter. That feeling is real, and it has kept a lot of people on the sidelines of something that compounds significantly over time. AI just changed the entry point to that world, not by making the decisions for you, not by predicting what the market will do. Nothing does that reliably, and anyone claiming otherwise is selling something, but by doing what a good teacher does, taking complex, publicly available information and making it genuinely understandable to someone encountering it for the first time. Here is exactly what the experiment looked like and what came back. The first prompt was deliberately simple. No jargon, no assumptions about prior knowledge. Just this: I am a complete beginner investor. I want to understand how to identify potentially undervalued stocks using publicly available information. Walk me through the key metrics I should understand, explain each one in plain language, and tell me what to look for and what to avoid. What Claude produced in response was genuinely one of the clearest explanations of investment fundamentals we have come across. Not a textbook definition, not a formula, an actual explanation of what each metric is trying to measure and why someone would care about it. Price-to-earnings ratio, not just what it is, but what a high number versus a low number actually signals about how the market is valuing a company relative to what it earns. Price-to-book ratio, what it tells you about whether you are paying more than a business is actually worth on paper, and when that matters. Debt-to-equity, how to think about financial risk in terms a beginner can apply without an accounting background. Free cash flow, why this number often tells you more about a business's real health than the headline profit figure that gets reported in the news. Each concept in plain language, each one connected to a practical question a real investor would be asking. That conversation took 30 minutes. It built a working vocabulary for fundamental investment analysis that would have taken weeks of scattered reading to develop independently. Not expertise, not the ability to predict anything, but the ability to read a financial summary and understand what the numbers are actually saying. That alone changed the experiment from interesting to genuinely useful. The second step was applying what we had just learned to a real company. A large, well-known consumer goods business, the kind whose products sit in most people's kitchens and whose business model requires no industry expertise to understand. The prompt this time was specific. Summarize this company's publicly available financial position, assess its current valuation against its historical averages, and tell me what risks a beginner should understand before researching further. What came back in under 2 minutes was a structured breakdown. Revenue trend over the past 3 years. Current price-to-earnings ratio compared to its 5-year historical average. Debt levels relative to comparable companies in the same industry. 3 specific risk factors worth investigating further before any decision. Clear. Structured. Something a complete beginner could read, understand, and use as a genuine starting point. And here is where the honest limitations enter, because this is the moment most AI investing content stops being useful. Limitation 1. Data recency. On the free tier, Claude's knowledge has a training cutoff. For understanding a company's long-term business model and financial structure, this matters less. Those things do not change overnight. But for current stock prices, recent earnings reports, or breaking company news, AI gives you the framework, not the current numbers. Every specific figure needs verification through a live financial data source before it informs any real decision. There are free ones. Use them. Limitation 2. AI can be confidently wrong about specific numbers. Not about concepts, the frameworks it explains are reliable, but about a specific revenue figure or a specific ratio from a specific quarter. Verify before you act. Treat every number AI gives you as a hypothesis to check rather than a fact to rely on. Limitation 3. The most important one. AI cannot tell you what the market will do. Nothing can. What AI does is help you understand what a business looks like today based on its public fundamentals. Whether the market recognizes that value tomorrow, next year, or not at all is a completely separate question that no analysis, human or AI, can answer reliably. The people who get hurt by investing almost always confused a research tool for a prediction tool. AI is a research tool. Use it as one. So what is the honest verdict? A beginner who uses AI to build their vocabulary before researching any company, to understand a business model before looking at its numbers, and to synthesize publicly available financial information into a clear starting point, starts from a meaningfully better position than one who either avoids research entirely or follows someone else's conviction without understanding it. The practical workflow worth trying right now costs nothing. Open Claude on the free tier. Ask it to explain the 5 key metrics for evaluating a stock in plain language. Then pick one company you already know and understand as a consumer. Ask Claude to summarize its publicly available financial position. Read what comes back. Verify the specific numbers through a free live data source. Then decide whether what you found matches what you are comfortable with. That is not a trading system. It is a research process. And AI just made it accessible to people who previously had no practical entry point. This channel covers AI as a practical tool for both building income and making more informed financial decisions. Every week, without the hype, and without pretending AI does things it does not do. If you want the complete toolkit for building income with AI while you build your financial knowledge alongside it, the AI Income Starter Kit covers the income building side in full. The link is in the description below. Subscribe for a new breakdown every week. Honest, practical, and built for people who want real information rather than confident predictions about things nobody can predict. The next video on your screen is the most watched video on this channel. It covers the complete AI income system that runs itself once it is built. The best place to start if building income is where you want to go next. Go watch that one next.